We're going here. Good evening, guys. Ken at Tortoise Capital, small group coaching cohort 4, January 15th, 2015 or 2025. All good over here in Kansas for my quick check-in. My big AI workstation arrived today, so can't wait to get into the plumbing and start. I saw a thing.
You're going to show us your workstation?
Well, it's still in the
really
box.
Cool.
Still in the box, but I mean, it's got.
What is the difference from a normal computer?
Workstation is just it's the same components as like a gaming desktop, except it probably has. When they say workstation, it normally has more, cooling and professional infrastructure on the inside. It's really kind of the same components, but it's a great big ass large container with liquid cooling and like 8 fans. So
that's run on different operation system.
No, I'm running it on Windows 11 Pro.
Okay.
But it's got the
heat your basement.
Oh yeah, that's the thing. I'm looking to save some money on heating. My electricity bill is going to go up, but the heating bill should go down. So we'll see if my wife notices any of that. It's got a top end AMD Ryzen 9 series 9900X. It's got the I opted for one step below the top line of the NVIDIA 4000 series. The 4080 Super has 16 gigs video RAM, has about 90% of the compute power of their top end 4090, but at about 40% of the price, or a lot, maybe 35% of the price. So sacrifice a little bit of top end video RAM, but probably, honestly, for all the work I'm going to do, it's probably overkill anyway. 128 gigs of RAM, 20 terabytes of data storage, couple SSDs, so it's going to be wicked fast, which is good. I got a bunch of video processing I want to do. Like, I'm really satisfied with the way Notebook LM converts audio files into executive summaries, FAQs, study guides. Just like going the last 2 or 3 coaching sessions that I've done, all I have to do is drop the audio file in, and it produces a detailed executive summary, a study guide, an FAQ. I posted those on Patreon, just so you can see from last night, because there's quite a lot of goodness, and it nails it in terms of it produces a little glossary, key terms, study questions. It nails that. It takes probably an hour on my laptop to produce all of those. It'll also produce a 10-minute pseudo podcast with artificial voices that talk about what's in the audio. It's like a male and a female persona talking back and forth in fake English. But they do a pretty good job on that. It's hard to stop listening. So I figure, I got about 1,000 hours of coaching audio. Why not? Right. So my plan is with this workstation now is to take all of those 1,000 hours, run it through the food processor, output all of those executive summaries, take those executive summaries, kludge them into a giant PDF local reference library. And then what you do is you use retrieval augmented generation to use the power of a really good large language model for reasoning, like Claude. But then you give it this local repository of documents as the sort of like the subject matter expert for answering specific questions. So what you get is the power of the large language model that is, you know, Claude has like 400 billion parameters in there. And it's fantastic on reasoning, but it was trained on material up to 2023, and it could say stuff that, you know, that's probabilistic in nature to answer questions. As you get more and more technical, that becomes a problem. But if you supplement that with a local RAG, a retrieval augmented generator, then it will consult that as the expert source for answering questions. So my spider sense is that I can, if I start with all the coaching sessions and then just add in all the other audio from 25 years of workshops, I should be able to create a pretty good clone of myself for answering questions that never tires of hearing the same question over again. Hey, there's that question again. Yeah. Let's talk about that one. What do you mean by the dragon? The dragon is, yeah, so you can feel the I take it sort of like as penance, you know, for crimes of a past life. And just like that's my job, is to stay in Dante's seventh level of hell, answering the same questions all the time as punishment for having been a bad student in some other life. Sort of my karma. Yeah. So anyway, that's what my the one big project on the AI 2025 initiative is going to be, is to produce all that. I'm trying to gently persuade my son to see if we can come up with a workflow where I can just take that stack of 1,000 files and just and grind it through the Notebook LM for that purpose. We'll see. The nice thing is that you can then hook that up to Pictory, which lets you go from long form to short form, audio and text back and forth. So you can go short form audio to long form audio. It'll elaborate. You can go from long form audio to short form audio. It'll summarize. You can go from short form audio to short form text. It'll produce a transcript. You can go from short form audio to long form text. It will elaborate in the text form. So you can go back and forth as much as you want to produce tailor-made solutions. So we'll see what we come up with. I think the workstation anyway should be able to, with all that power, should be able to not only heat the home but also get some work done here. We'll see how that goes. Anyway, that's my quick check-in. Had a good conversation with our two-star general yesterday, who's the commander of our U.S. Army Combined Support Command. She's in charge of all logisticians in the Army and all their teaching. And what was supposed to be a 10-minute briefing on artificial intelligence in support of curriculum became an hour-long discussion with her and me. So I'm going to be firing up her staff with some stuff to do, because she was on it, man. She was good. Sometimes you get senior generals that play the role of, well, I'm just a knuckle dragging caveman, and I'm just gonna not even sure how I got here. Yeah, shut up. We know you're pretty smart. We get it. She's not one of those. She owns how smart she is, and it kind of like donates it to the team. And she knows she's in support of the team, but she doesn't pretend to be a cave person. She's pretty impressive. So things are moving out nicely on all that. We end up getting 30 officers signed up for the AI elective just through word of mouth. We didn't even advertise it in the course catalog because I wasn't sure how many I could manage. We had 30 people sign up to take it, and half a dozen faculty. So I'm going to be looking at rolling a bunch of that stuff where I can into our AI 2025 initiatives. Take advantage of these kids for their own good. So that's what's going on here. Let's do a quick check-in and get on with it. Got a full house today. Chin Long, you're the first one I see on my screen, so I'm gonna ask you how you're doing.
Yeah, very well. Nice weather. Everything going well. I hope.
Good. Dan, back from vacation?
Yes, and it's very, very cold here in Maryland after a visit to Mexico City. So
Ooh,
I'm trying to adjust my thermostat.
yeah. Eric, how we doing, bud?
Yeah, no, all good here. We need a little more snow though, south of Calgary, out here in Montana, because we're struggling skiing on ice.
Yeah, cool. Mark, how you doing, man?
Good, good. Things going well. Working with Sandeep on some stuff for the website and doing well.
Hey, what I got for you guys is just well before I forget, I kind of broke the code on writing production, right? So I gave it some instructions to produce complex topic sentences, and then parenthetically get 5 standard and 5 focused keywords that you can take that whole sentence and the set of 10 keywords, drop it into the bulk writer, and it'll give you an article up to 3,000 words according to an outline that you give it for like a standard form. So I dropped 50 technical indicators and 60 topic sentences from system, self, and psychology. So you got about 150,000 words of articles. Maybe, actually, almost 300,000 words of pretty good articles, which you could use to populate a website as a service, as an essay database or whatever, to help draw some attention to the products and whatnot. So if you guys are interested in that stuff, I'll shoot you the text files. Pretty simple. My son helped me on that. It's like you can put a batch of 30 or 60 giant articles to write like that into one process. It'll export it to a library. And he wrote me a little workflow to turn the comma delimited file into HTML essay forms, breaking it out into individual papers. So, let's talk with Sandeep, see if you guys want to use that as a attention getter.
Will do.
Tim, how are we doing, sir?
Good, making good progress. Chugging along, getting some good numbers, and got a few trades on, so looking good.
Yeah, let me remind you guys, take a listen to the last couple sessions of each of the other cohorts. We're starting to get some good crosstalk and really good work done. The one I did last night, you can see the notes I put onto the Patreon site. The idea, the rule of 4 for entry and for simplified entry and exits is pretty darn smart. The best part of it is that it defines the channel as the previous peak and valley turning points of the RL10. And if you just divide that into 4, the idea is when it reverses, you put that rule like a carpenter square, you put the rule of 4 on there. You say at the 25% retracement, if you enter there, you're giving it 1, but you're aiming for 3 on a return to far side of the channel. So you give it 1, you aim for 3, you settle for 2, you keep 1. So anytime you get past 1, you make sure you keep 1. If it gets past 2, you're aiming for 3, but you'd settle just to keep 2. And what that does is give you a sight picture or a lens that is independent of the time frame that you're using for your trading. because the turning point of the RL10 is going to pretty well determine a significant turning point on any time frame. Once you put that lens on there, when you start shifting your time frames, the indicators will move around, but the anchor points on specific prices remains constant, and it gives you a really nice visual if you're flipping around between time frames. I showed an example of that it'll be in today's report where I'm looking at the market. It's SPY over the last 30 days. And today was the 25% reversal. It's sort of a poor man's Fibonacci, but the beauty of it is if you end up entering at the 25% retracement, you're front running that Fibonacci 31.2 or whatever the hell that is. And the 50 and the 60. So you end up front running Fibonacci players. And you can see where if there are Fibonacci players, you can see where they're starting to activate, but you're already in the position. And what that does is it simplifies your life for trying to identify a chart pattern that you want to use for entry. It just strictly says, hey, here's a price. It's price movement alone that I want to use. And on the exit, it's really nice too, because it equates to the keep percentage. What is the maximum favorable excursion? How much of the open gains do I want to keep as a strict percentage number? So now you don't have to spend a lot of cognitive effort on choosing this indicator array versus that indicator array. And the main logic, again, being all of the extra details you put into your exit decisions or entry decisions is really just so that you get to keep more of the gains. And when you brief your supervisor, they don't really care what the little particular rules were. They want to know the answer to two questions. In this trade, once we entered, what was the maximum favorable excursion? What was the most we ever had? Okay. How much of that did we keep? So if you can say I kept 70% of that, okay, I don't need to know any more details. Whatever you must have done did okay, I guess, because I'm happy keeping more than 2/3 of my open gain. Conversely, if you said, well, I managed to keep 20% of my open gains, any further explanation of that, of why your rules and your ideas are really, really good, suffers in comparison to the fact that you gave back 80%. Now, maybe it was because of a gap, but strictly if we're talking like intraday, that one is a very simplifying cognitive frame. And I'm really satisfied with the way it's feeling right now. And you can quickly deploy it on. Anyway, you can see me talk through a bunch of examples of that in last night's meeting with the cohort 2 guys. Yeah. So there we are. So make sure you listen in on cohort 2 and 3, especially good, the last 2 or 3 sessions with those guys. Okay. Let's go ahead and jump in. Who's ready to get us started? Chunlong.
Let me share. So after last week discussion, I just try to revise my spreadsheet. So can you help me to review this? See, you haven't any.
Let's see.
Anything
Strong
wrong?
upward trend past 30 days. I would say, let's see. Strong uptrend for the pet. Is what you've highlighted in yellow, is
Yeah.
that a different is that a different definition, or is that you just interpreting what it means?
That's my definition compared to the
Okay.
ADX indicator. The ADX is strong trend.
Yeah,
So my
okay.
strong trend is make a 52-week high. That means very
Yeah.
strong.
Okay, let's see.
That one is
Okay,
easy to read.
the 52-week high is a different, I think is a significantly different definition than the one that I use.
Yeah.
And the reason I say that is because I can imagine something that has had a horrible move away from the 52-week high and it went down to a 52-week low.
Yeah.
But then in the last 60 days has made a significantly strong move. And now we might say is showing a bullish tendency, but it might even be below the 50-yard line. It's still in the bottom third of the 52-week box. And my definition might pick up something like that as this is a strong new trade that still has plenty of room to go. And the stronger it is, the more momentum traders it's going to attract. It has already attracted the value players and there's more room to go. Whereas my belief is that if you're at or near the previous 52-week high, you're actually at a critical state where the probability of failure is actually greater, simply because people think that they've already got their nice big move and they're ready to start running away at the first sign of weakness. And the chart that you show on there is an example of that.
Yeah. That's why we trade the pullback, right?
So my point is, if I put your definition requires me to be maybe in the top 20% of the 52-week box. Mine does not. It only requires really about a 30-day really strong move, no matter where it is in the 52-day box. So what I think this is going to do is give you something more like the sniper trades that are fireworks, but it's going to miss a majority of the trades that my definition would pick up, which are early in the recovery phase, have strong positive momentum, but are still a long distance away from the 52. See, I think those become attractive to people that are value players.
How do you measure that, Ken? Use ADX?
Yeah, the ADX. Yeah, ADX greater than 30 requires a 14-day move minimum that is exceptional. To get to an ADX greater than 30 is kind of hard, but you could do it in about 15 or 20 days of exceptional performance would get you there. It doesn't require also a trade location near the 52-week high. So that anyway, I say that as the first piece. So now if I'm looking at your chart, so this definition, I'm already passing your first test right here. Assuming that's the 50. And in fact, I start anywhere above here, that whole move is firing on all these.
Yeah.
And I suppose this gets pretty close on the pullback, I'm guessing. That would be close to firing. So that one would be successful. This one would probably fire. This one fires truly. But I guess what I'm saying is if that was my 52-week box, and what I'm saying this will never let you get is something that did this and is now somewhere around here. Where and maybe that's even a double bottom. And now it's moving out. So there's still a long distance of potential gain away from the previous 52-week high. Like there's a 1 unit of risk and 2 units of reward. And then if this thing pulled back a little bit, you'd have the criteria for a good triple screen, because the strength of this trend here is more important than the weakness of that trend. And in fact, the fact that there's people buying this, and it was strong enough to create an ADX greater than 30. So any little pullback in this trend, I want to go. And my thought is that all the value players, the guys who are looking to buy this thing earlier, are still willing to buy that because they see a return to the 52-week high as a reasonable price target. They're ready to invest in the rest of the swing trade. But it's like the guys who were buying right here. You know, they're all saying, yeah, this thing, maybe the 52-week high at this point was back here. So they're willing to invest in that. And oh, by the way, the requiring a 2-to-1 to get back to the 10-day high or 30-day high, you'd never end up buying any of that. And yet this is a nice triple screen model in here where you have, this feels like a positive. I don't know, I'm not sure what the ADX on that would be, but it feels like it would be pretty good. And now the pullback to here, I can start buying somewhere around in here, certainly not later than there. And now I get the swing trade that I'm hoping for. I think that takes this off the table. You'd never see that trade. Now, I kind of like this one. I'm assuming that the ADX is still pretty strong for me. Up in here, it's pretty strong. I don't know that this is
It's a Magnificent Seven ETF.
yeah, I just don't think, I don't think, look, each one of these is lower highs. That's an auto framer for sure. I don't think that feels like a triple screen to me.
No, it's not. It's not. It's my
Well, then
modified triple screen.
then why are you showing me this, man? I thought we were talking about triple screens.
Now this is the triple screen. This is my modified, because if we
Okay.
use
So this is not an example. All right. So this one is not an example. This is not an example of this.
no, this
Okay.
the
Never mind.
modified.
Okay. All right. Well, here's what I would say. You got to tell me, how far back did that 52-week high hit? How
30
long?
days.
How it was in the last 30 days?
Yeah, it's in the last
Okay.
30 days.
Okay, so it made a 52-week high in the last 30 days. All right,
Yes.
I get that.
Yeah.
And now it's had a pullback
Yes.
such that the yellow zone risk
Yes.
gives me a 2-to-1 to the 30-day high. I like
Yes.
that. And that's what we said something on that. Now I like that.
Yeah.
I actually think this is more like, rather than a modified triple screen, I actually think this is a sniper pattern. And it is the fireworks pattern, which requires a move that went to the all-time high or up in the upper 10% of the look back periods and is now pulled back to the point where it could either return to the previous glory or continue to fail. And either one of those moves is going to be large. And that's what this is.
Yeah.
So
Yeah.
I think that's a sniper fireworks pattern. I also think it's the auto framer 30, AF 30.
Yeah, basically that's what we talked last
Yeah.
week, right?
Yeah. So
Yeah.
in that sense, I do like that. Yeah, I like that. That's fine. You don't really need that, yeah, because the risk reward is sufficient as a retest of the 30. I'm gonna assume this is all correct. 30. I don't know that we said that had to be true, but I get it. What you're really saying is that there's a nice long previous upward move, and it was so strong that this little pullback did not cause the moving averages to start crossing.
Yeah, exactly.
So that's fine.
Yeah.
Yeah, using the ATR instead of the yellow zone, I like that. Entry, got it. Yeah, with that, philosophically, I don't think that's a triple screen. Although I suppose actually, I now would agree. Yeah, it kind of gives you this here instead of this just being a strength of trend, which is what the ADX measures. This one is based on the fact that trend took it to a 52-week high, which is emotionally significant. You had a shorter term pullback within the last 30 days that has stabilized, and now you have a favorable reward to risk. So yeah, I like all of that. I would like to call that the auto framer 30
Yeah, I could do that.
because I think that's actually what you've got.
Yeah.
I like that.
Yeah,
And
the
you're
reason
using
I modify,
Yeah.
because you look at the first dip. If I use your triple screen, I never get a signal.
right. Yeah, I like this better. The only thing I think I said before was it mattered where the 30-day high was. The additional thing that you added was that that was also near a 52-week high. I don't mind that extra piece. You're saying the 30-day high was also was in the top 10% of the 52-week trading range.
Yes.
So I
exactly.
like that. That's
Yeah.
the equivalent of in the sniper, we call that the 150-day look back, which is 30 weeks. And the difference between this is a 52-week instead of 30-week, but I don't think that's that big of a difference that matters that much. So I think you're fine with that. Yeah, I like this. And I love this. You're gonna crush this tomorrow. The next 2 days, be ready.
I already in
Cash a
that
nice. Oh, you're already in?
today.
Oh, good. I was gonna say then the next 2 days are gonna, I think, have a potential to be great with a sell-off near the close on Friday. With the belief that that's the end of the Biden administration. There's a holiday next week. There's going to be 3 days of news and people wondering about Trump and are going to want to take their profits. So I think there's two really good trading days left. And then people are going to back off and wait and see what the response to the Trump inauguration on the 20th feels like. But I think I think all of this sell off in the Mag 7 was guys taking profits from last year's amazing run. And now they're postured here. And I think there's a couple days of buying tactically. And then on January 20th, there's a new sheriff in town. I bought a bunch of Bitcoin in here, which I wish I'd bought more. That's making me look smart. Well, I found out there's a way to buy it inside our TSP. They actually now allow you to move up to 25% of your TSP into mutual fund window. And then you can have access to about 1,000 different mutual funds in the TSP, which I wish they'd have given me that choice longer ago, but there we are. Anyway, yeah, this looks good. I think I would be ready with an exit plan to protect profit on Friday.
Yeah.
Make a decision if you want to do that, depending on how big your position size is. I just think there's we've monkeyed around with this enough. It's come all the way back to here. Here's the last support level. We're consolidating above that support level. And this is postured to go because of the Trump effect. So in conclusion, I like all of that.
Okay, thank you. So I also modified the washout pattern. So on the left, your
Yeah.
definition of washout, on the right is modified.
Is this
So,
so these are the two additional rules here?
yes.
All
Look
right.
at the highlights.
Yeah, I'm
Red.
looking at,
Look at the red 132
okay,
days.
let's see. Yeah, okay. I don't mind that. That gives you access to more temporary weakness.
Yeah, exactly.
Yeah. And that's fine. And then yeah, I like that because you're looking at the 30-day instead of the 10-day. And that's more consistent with the auto framer 30. You're really looking for the longer term pullbacks.
Yeah, yeah.
And meaning that there were probably 2 or 3 times for guys to sell and then the buyers come in. So it's a longer look back. I think that's fine. And then -1 close greater. I like that too. Because now what you had is actually if you had 4 selling days and today was and then yesterday was nice, that was your first recovery day for your setup day. And then the 5 EMA is probably like this. So yeah, you'd like to see this better than that. That's good. I like that. And target. Yeah, I like that. 4.25 to 1.
Yeah.
Is there a reason 4.25?
Oh, yeah, because sometimes if you look
Yeah.
at the 2-day low or 5-day low, it's
Yeah.
larger than 1 ATR.
Yeah.
So,
Okay. Got it.
yeah.
Yeah. And then 1 ATR or the 2-day low. Yeah. Okay. I like that.
Yeah. Here's the 2 example. One is a cliff, other is the
Yeah.
material.
Yeah.
So actually,
Hey, I'll tell you, well, this will make you sick. Devin. Oh,
yeah, I missed that.
yeah.
I actually look at that, but I don't have the conviction to take it.
Yeah. This one would have caught Devin. Devin is just like, dudes, I'm just Devin energy over here. Market was selling off the last 30 days, and all I did in Devon was just Hulk smash. Yeah. Yeah. This one should always get our attention. Pain, despair, settling, one last effort at despair, but no additional pain and suffering. This is going to be nice. The return of America to greatness. Things like, yeah, this is one where you might take a look at XLB and break out the components and see which of the components of XLB look pretty good. I bet you IP is going to look pretty good. Yeah, I like all that. That's good. That's good stuff.
Okay, so going
The
forward,
fact that you got the 30-day high over here. So now
Yeah.
if you end up entering anywhere and your stop is down here, it gives you a little more wiggle room.
Yeah.
And you're looking at the fact that, hey, the last 10 days, it did not collapse and the setup day was above the 5 EMA. And you know what? As you get further into this, you might even ask the slope of the 5 EMA to be positive.
Yeah.
That would actually indicate it had 5 days to fail and it did not. And today's close shows that we're gaining some short-term acceleration. So you might think about that. Okay, keep going.
Yeah, that's all. So going forward, I will treat these two patterns.
Yeah, I'm liking that.
Okay.
You're going to be a an aggressive tactical value, tactical ATV, aggressive tactical value trader.
Yeah, the two patterns just opposite.
Yeah,
It's almost
Yeah.
52-week
Yeah.
low or
Yeah.
6 months low.
yeah. This is your catfish.
Yeah.
Yeah, so
So
you put those two patterns together, you actually are handling. This is nice because your top pattern, if you say this is all the normal stuff, that last one you did was things were near their 52-week high within the last 30 days, has pulled back, stabilized, and is going. So you're getting exceptionally strong movers that had a little pullback. And then this one gets things that have been murdered and have failed to fail and are showing signs of life. So you're getting relative strength with the pullback and recovery, and then relative weakness that is healing. So you're both of those patterns will find targets that are within the abnormal range with reasons to believe that they're becoming favorable, and you're avoiding the routine noise in the middle. So you're concentrating on edge cases. This is the combination of those two feels pretty good. All right, what else you got?
yeah, that's it. Thank
Okay,
you.
Roger. Next man, Dan, fire away.
Okay, let me share my screen. Here we go. Okay, here's my you see it okay? Here's my weekly check-in. I mentioned I'd been on vacation in the holidays, so everything that I have sort of came together tonight out of what I'd been thinking I wanted to do, which was to get back into hybrid swing trading and how. So I prepared for this session by reflecting on my objectives and researching some ideas on the part-time and how to manage it for the intraday portions of the trades.
Yep.
I remembered last time, the last session I was at, December 18th, Eric had mentioned that kind of what his schedule looked like. And so I just kind of recapped. I figured it looked like it might end up being about 3 or 4 hours a day. And that would be split across the morning prep and the market open and after lunch check-in and market close periods when the market's most active.
Yeah.
What I need help is sort of defining how to get into this. What would it look like for me? I think it would help me to kind of have a structure to it that wasn't overly onerous, so that I could say, okay, this is not too bad. I'm going to do this. For those 3 or 4 hours a day, I'm going to really be at the screen, if at all possible, or at least very rigorously checking my alerts and checking my alerts and my alarm clocks. What I'm missing, everything, a new plan, a schedule for this, and marching orders. And what I want to do is to start developing those with your help tonight, start developing those and work that over a 6-week period because I've got a window of 6 weeks where except for 1 week in the middle, I'm not doing a lot else. And I think I need to, I think I gave you the coach's eye stuff, what I felt I needed to.
Yeah, I think if you're looking at 30-minute charts, the trickier part on this one to me would be to figure out how much effort you want to put at all into the morning session. Because I think what Eric's doing is he might have a shorter time period on this to get his day trades well started. And then once they get going, he can shift to a 30-minute chart and kind of let it cruise. And then dial in for the last minute, maybe 10-minute charts in here. So he has a couple checkpoints where he's looking at some intense effort and then standing back and just letting the process unfold and then final decision making. But that is sort of, I would say that's probably like 80% of his effort is contained in intraday. If you're looking at hybrid swing on 30 minutes, what that you don't really have to be on the short-term timeframes in here at all. Because if you think about a 30-minute charts, you probably have at least the last 2, maybe 3 days, -1, -2, -3. And here's the 0 day of live execution, right? And so when you look at the dragon, let me put that dragon in there. You know, your dragon patterns might be something like this. And then the supporting RL10s would probably look like, you know, this is notional, of course, but your RL10 patterns probably look like that. And so that gives you something like on the 30-minute channels, you get these endpoints. And then this is where my hypothesis of the rule of 4 looks like. You just say from endpoint to endpoint, you just cut that in half and then in half again. So what that says is if you take this to be your channel defined by those 2 endpoints, then my entry has to be like not later than here on the day of execution. And then I'm going to have my risk here, because if it goes that way, I'm going to take a collapsing dragon entry automatically, and that's price based. So I don't have to be on 3-minute bars watching that. I can just put the order in, and if it hits that, it's short, and you get an alert that you're in the position. So in that model, you're sort of auto long here. Like if it opens anywhere in the yellow zone, I would think of this sort of as a modified yellow zone in that sense. That if it opens in this region, which is between the 25 retracement and the actual swing low. In this sense, the yellow zone is that area of indecision. That's not going to be the yellow zone based on yesterday's price action, you know, the high and the low. In this case, the yellow zone is you want it to open inside the yellow zone so you have a clear mechanical entry to go this way or to go that way, with that as a standard risk to get you started.
Yeah, I like that. I'm going to
Yeah.
listen to the session you did the other night
Yeah.
and see.
So if you
see
give
whether
it
that's
one,
good. Yeah.
with that
Mhm.
idea, if you give it 1, you're aiming for 3 on your swing trade. Now, it may not get all the way back up to here in one session, which is why it's a swing trade, but you're aiming for 3. You'd settle for 2. You'll keep 1. What that means is you get this entry and it goes up to 1.5 and starts to come back. You cut it at 1.
Mhm.
So if you have each of these price levels as alerts at 1 and 2, it'll tell you when you need to come and adjust your stop. Or if you put that into a rule, I think when it gets to 1.5, your stop needs to be at 1. Because if it's at 1.5 and doesn't go to 2 but starts failing, you want to keep 1. If it gets to 2.5, doesn't get to 3, and starts failing, you want to keep 2. Otherwise, you just trail with that 1. And then that allows you to put a couple profit preservation moves inside there. The other thing this will do is you could then say, if it gets above my previous one, then the channel trade is off. And now we're in a new Darvis box in an emerging dragon. And now you can decide if that's going to be a second position because you have at least 3 in hand. Or you just say, no, I'm just going to manage that one a little more carefully and never let it go back less than 3 and just manage a single position. And then you have to add a second position not later than 6. But that's a good problem to have. So I think right there is a way that you could use 30-minute bars. You're probably looking at the last 3 closed days because you got 7.5 hours per day. That equates to 15. Maybe I think it's 13. Or is it 15? It's 13. It's 6
per day. Yeah, 13 per day.
It's 13 per day. So if you had 3 days, you're looking at about 40 bars of price action, which is enough to find those big turning points. And then you'll find that a quarter of that is bigger. It's probably at least an R5. It might even be a full frog box. And that should give you enough to get moving on day 1 and still have a reasonable position size. I would start off with this thing probably like frog box initial risk, even for position sizing. And I would definitely use the breakdown below of this previous one as the auto out. I have to be out in collapsing dragon. I must, because that's the second leg of the downward move. That's what you do when you're in the bottom section of this and you got to pull back and you want to recover. That's attractive in a bull market. The other side of this that is when you have a 3-day and the pattern looked like this. It's up and it pulled to here and now it's down. So now when I take my rule of 4, half and half again, that means I got to decide I got to get short here to aim for 3. But if it breaks out above this, yeah, there's my emerging dragon entry. And that's actually a kata 2, right? Mm-hmm. So that feels okay. If your 3-day look back look like this, if it's inside this area, I think there's no trade. The only trade you can make is if the turning point was here and here, and now this thing has gone, it's come back to the midpoint, and you want to aim for the return to the channel, you're only getting 2, and your stop has to be here. So there's still a 2-to-1. That's not 3-to-1. It's only 2-to-1. I would take that trade if and only if the previous move was significantly down, and then this was just then I'm going in the direction of the previous significant trend. So you'd have to go back probably 10 days to look at that. But for the most part, if you look at 3 days and it closed in the upper or bottom quarter of that period, you're going to have you'd probably want to look at 10 to 20 symbols and find the ones that closed in the bottom quarter or upper quarter of the 3-day look back. That feels like a 30-day, or I mean a 30-minute hybrid swing. If you look at the regular auto framer, the auto framer is taking a look at 10 days and it's testing the 10-day high, and it's using the daily doji for the risk management. And then there's a favorable retracement. But I'm using daily bars. Because I'm using 30-minute bars on this, I can use just the last 3 days because it's going to be more adaptive to near-term events. And this is approximately what I was doing those previous 2 years, in 2023 and the first half of 2024. Really, I only needed the last 3 days because it was significantly more adaptive than the daily bars. So, it's 13 times faster because there's 13 30-minute bars in a day. Instead of one daily bar to give me new information, I had 13 30-minute bars, and I was getting shorter term trades. If you look at, there was probably 1,000 trades, maybe 2,000 trades in that 2-year period. And most of them were less than 3 days long. And it was very efficient in capturing those multi-day tactical moves. So I would say replay this portion a couple times and kind of sort of, but if that feels good already, it sounded good in my head because it sort of synthesizing what I'd been doing with the 30-minute hybrid. I think you could work with that.
Yeah, I got a couple other things on the next screen to run past you, but
Okay, go ahead.
But that one I like because I think it could be done a lot with alerts and stop limit orders and trailing stops.
Yeah.
So there's a lot of automation you can do on that.
And the 30-minute bars have wider moves, so you have a little more leisure time, if I can say it that way. Okay.
Yeah. When I get to my number 2 here, I had a question about what setups to use, and this would be another option, the rule of 4. But I was also looking at the RL10 crossing the SMA 30, and that one does very well on the 10-minute chart. So there might be times when I'd want to jump down to 10 minutes.
Yeah. Here's the other thing I'm going to tell you. If you decide to do that, start with your 30-minute candles, your 30-minute bars. Get your little rule of 4 thing in there, because it's down here and it's going like this. You say, hey, I've got to enter at that price point today if it crosses. Then when you dial down to the 10-minute, you're going to see that the RL10 has recovered and is approaching the SMA 30, and you're going to get that crossover pretty close to where that happens. You're going to be astonished and that's going to be pretty close to a PSAR flip too. So all that stuff is going to line up. But if you have done this on your 30-minute bars, when you shift over to the 10-minute bar, you'll still see that big, thick green line. And that sort of tells you, well, while I'm waiting for this thing to keep price improving, it's right here. Here's the price level that I have to get long. That now tells you where your discretion is. Is there something on the 10-minute plus the market action that tells me it feels okay to front run that a little bit? Or maybe I put a half a position on, and then if it breaks through this green line, I put the second position on. And then what I get is an average entry halfway between those, which is price improvement on the 30, but only at half the risk. Because if this fails, I'm going to be short on the collapsing dragon, but my loss was only on half a position. So that's actually a nice way. That's why I would say if you're looking at multiple time frames, you'll be concentrating on your 10-minute in the first 60 minutes. So that's an hour. And then you get it started. Now you're just managing on the 30. You can just come back at lunch and see how we're doing.
Yeah, yeah. I want to keep it fairly simple, as you'll see. If you look at these setups, I asked myself and you, should I trade all the Kata 2 challenge setups, or should I just trade when the
I would
crosses
I'd start with about 4 or 5 base symbols
Mhm.
and get your 30-minute chart analysis, your 30-minute bar analysis, and the rule of 4 and the prep for the day ahead, and just do that for a week. And
Okay.
then if that goes okay, or like when you got winning trades on the 30, then dial down to the 10-minute and then go see what it looked like to see if there was a way to improve that. But I'd like you to be locked solidly on the 30-minute bar entries and risk management and framing, and really have that mastered as the core competency. Then and only then, when you've ironed that out, should you then look at adding the 10-minute bar and then other Kata 2s and all that other shit. No, 30-minute bar, selecting your targets and framing them, having that on your daily trading template all day, and see what that does to you for notice where your urges to tinker are and all of that stuff. And then just trade that exclusively, for a week. And then later go back, put it on the 10-minute and see if any of that could have given more information to fine tune your decisions. Or did it, you might also find, the 30-minute kept me out of the 10-minute noise, and the 30-minute is fine. And if the 30-minute is fine, you don't have to squirrel around any further. I would tell you this. On any open day where you have 2R in hand, which you'll notice, and it's starting to fail in the afternoon of that day, take a 2-bar exit, 2-bar low exit
Mhm.
on the 30. Just get paid and walk away from it. Try that for a while. Because that's really the equivalent of a 30 each. What you're really doing there is an OR 30 breakout. You have something like, hey, my setup was this. I got my entry. It went pretty well. I checked back in the afternoon. There's 2 hours to the close, and here was the peak maximum favorable excursion, and now that thing is just fiddling around. And here was my 2-bar low. Don't let that thing go below here. So your 2-bar low will preserve that trade. And you
that also might be one of your quarters in that case.
It probably is.
Yeah.
It probably is. And that's where the beauty of that thing is on the quarters. You might have got this entry, and intraday it gets to 1, and now it's drifting back. There's your half. There's your no lose plus dinner for 2. If it got up to 2, and now there's only 2 hours left in the day and it's drifting back, there's your 1.5. And if it got up but not quite to 3 and starts drifting back, you might either take it at 2.5 or at 2. What you'll notice when I put my little rule of 4s lens on there, I put the halves. I put the halves in faint just for calibration.
Mhm.
Because if 4 is good, 8 is better. All right, keep going.
All right. So, we talked about the schedule. Most of my stock trades, almost all my stock trades will be long, but I was going to maybe do some futures, long and short. But for the long trades, the stock trades, would I maybe want to not do those. If the market was in a risk off and you didn't have the risk Z bars starting to turn back up, or were in some sort of pullback, bearish pullback.
Here's what I'm going to say on that. I would suggest that you use the rule of fours and this 30-minute hybrid and just concentrate on big indexes for right now, because then you don't have a separate consideration for the market condition influencing your trading target, because you're trading the market. So what the reason to start that way is that in the future, if you really like this style and then you decide to drill down into more volatile companies or sectors, you already know how to trade the market and you'll have a sense for what it's doing. And is it contributing to or undermining the move of the turbo targets? So that's why I would start with, for example, SPY, DIA for conservative, Qs for aggressive, and Brazil for a least correlated global. So I would try those four. If I had to do a fifth one, I'd say energy, because it's the least correlated to the broader S&P.
Well, in my TradeStation futures account, there's micro minis for most of those.
Exactly.
Not the EWZ, but for
Yeah.
the NASDAQ and the Dow and the energy, well, the oil,
Yeah.
and the SPY or the ES.
Do you have currencies on your TradeStation?
No.
Oh, because the British, or not the British, the Brazilian, was it the real? The real dollar pair ends up being an interesting currency pair.
Yeah. Okay.
And I would say either Brazil or Mexico. See if there's a mini for Mexico. There might be a mini for Mexico.
I can look. Yeah. Be fun to trade Mexico since I just got back.
What I would say is, and now here's what I would say: if you're looking at the mini futures for the after hours, take a look at NQ, and then look at what Hamad is doing, because he's also trading the after hours single target focus on NQ.
I actually wasn't too sure. In trading futures, I was thinking maybe I should trade them during the market hours, not during the after hours.
That's why I want you to look back at the cohort 3, because you're using the same rules. Hamad is trading NQ in after hours, and Chi Wing Chong is trading it during open hours.
Mm-hmm.
And they're both experiencing success.
Okay.
So
the minis after hours are going to be pretty volatile, because they get moved pretty easily. So
that's what he's looking to do that, but on 3-minute bars. So he's dialed in kind of exclusively on that.
Yeah, if you're actively trading, it's fine. But if you're going to try and put stops in the market and walk away for a couple hours,
that's not going to happen there.
Yeah. So again, I don't want to introduce too many variables into this.
I would just
test here.
Here's what I would say: if you take a look at those 4 that I described, or 5 if you had energy, that gives you plenty to do to experience that 30-minute without trying to hurry and look at the 3 minutes all the time. Just let the 30-minute be the 30-minute. Look at the last 3 days to guide you, and then use that rule of 4 to kind of stay calibrated.
Yeah.
And what you're really doing there is isolating market activity, right? Later, if you decide to go to turbo targets, you have an understanding of the market, and then the more volatile target. Like you could go the Qs and Tesla, or the Qs and Palantir, something like that, or Nvidia or something.
Okay.
And that way,
one that's aligned with the master index.
Yeah. And what you're doing is you're using the basis of your evidence that you generated about trading the market itself and then you can answer your own question about how should I think about market action influencing my turbo target. If the market itself is moving, that's probably all you need. But if the market is stalling at a doji, but the turbo target is moving decisively, you then get you have a nice problem. You say, well, I can go with the thing that's moving right now, and that one may be large enough and strong enough to actually make the market follow it because it's a market leader, because it's huge, and you might get a really nice entry on the market move with a really tight stop on the doji. I've noticed that can happen with DIA minis really nicely, because when that thing gets quiet, it gets really quiet. And then a couple of the big fat super caps will start moving, and then the Dow will slowly start following. And you had a chance to get a really tight stop on the directional move in the Dow. So there's some options. So there's some experiments on down the road for you to look at there. But I would just try to keep it simple and get your rules coded, and then develop those till you're satisfied with the daily prep, and then how to handle that first 60 minutes. My experience on the 30-minute bars was that the first hour I was engaged, and then the trade just took over, and I could go do other things with trailing stops and alerts, and just fine. And I like to check in at lunch, and then I like to check in the last hour.
Yeah.
And so that was probably 2 hours of focused effort over the 7 hours of trading. So that was sustainable.
Now, we did some back testing in EdgeRater in the OBUG group, which for intraday trading, and they were looking at I think Philip shared that with you. They were looking at the 3-minute and the 10-minute and maybe the 30-minute.
Yep.
But they found that Tuesday and Thursday were the best days, and Friday was better than Monday.
Yeah, I don't put much stock in that, to be honest. I think that's the differences in performance are not statistically significant in my view. On the very, very liquid symbols, those things are being driven by relative price action and immediate conditions, and not data. Like, there's nobody in the professional world saying, I was going to take that trade, but it's Tuesday, so I'm not going to. No, say, no, I'm going to really be good today because it's Tuesday. And so, no, they're looking at price action, volume, risk strictly. And I don't find the day-to-day variation to be very significant, with the exception of the last hour on Fridays, when guys are concerned about liquidating risky positions over a weekend of news. There's 48 hours when news can jerk me around.
Yeah.
So other than that, I just don't. I would not. I think it's approaching curve fitting myself.
All right. So then
what I actually think is better. What I think, which days of the week should I be at my best and really ready to trade? What trade frames are closest to their critical states? Hey, the turning point was yesterday at the 3-day low, and the dragon turned, and it's only, an R5 away from a 10-day collapsing dragon or something like that. That's the day to really be ready for tomorrow, not because it's Tuesday, but because you're at a compound critical state that is just screaming for attention. That, to me, is the day to be good. Tomorrow's a good day to be good when today closed at a compound critical state, in my view.
Okay. Yeah, that makes sense.
And that way, what you're doing is you're putting your attention and effort and priorities on the specific features of your personal system, as opposed to a generic multi-year study of a gazillion variables in the market on timeframes that don't matter to you at all. I would much rather have a smaller data set just related to my little corner of the internet where I'm the bigger fish in a small pond, so like that. So that's what I would be cautious about, the ease with which we can find insights in a world of AI and data mining. Stay connected to your simple rules, and what the rules are suggesting are important. And to me, it's how compound is my compound critical state. Okay, next.
Just final things, just any insights into how I can hold myself accountable for
Get a
following
trading
plan.
partner and a trading journal and commit to it. You and Tim. If you don't like Tim or he doesn't like you,
Well, Tim and I haven't actually met.
well, you're both interested in swing trading.
Okay.
And you both need an accountability partner. I'm just saying.
Yes, there's no time like the present, right?
All right. Well, if you're willing, Tim, I'd love to.
You don't have to be
have
trading
someone
the
to
same
touch base on.
systems. You don't have to be trading the same systems to be in each other's accountability partner, but you got to be able to explain your system to him so that he could judge whether you were following your rules or not. And so you got to be a good neighbor. That means don't give him some god awful complex rule system that makes him work hard. So take it easy on him and do yourself a favor by having very simple rules. And then figure out how to give each other accountability at some frequency that you can sustain. Once or twice a week, maximum check-in. Once a week for 40 minutes or something like that. If we're meeting on Wednesdays, do it on Friday and review the week of trading on Fridays together, or Saturdays. You pick a time. Next.
All right. I'll stop. Thanks. This is great input.
Okay. Next man.
Hey, I could go.
Nope. Eric. Appreciate your patience.
All righty. Here.
This better be good. I've been waiting all week for this.
Okay, so two things. Flashcard, which we talked about last week, and then just a real quick thing on beliefs, something I've discovered about myself. So flashcard, so I call this all weather. I've got a symbol set. They're there. There's ETF equivalents. I do use some futures in there. But I think the key is it's non-correlated for the most part. And so at some point, one of those things is moving, either up or down. Just to try the common patterns, SSC, CD, caught two longs and shorts. These are 30-minute charts. Use Frogbox for risk. On the side, I put in a range stat and an OR 30 box just so I know where the open is. And then I kind of know where that range is for the day. Yep. But I've started to include the rule of 4 box.
Helpful.
And just today I bailed on a couple of positions at the close at 75% keep. So,
enjoy that. Now enjoy the gap up tomorrow and kick yourself for listening to me. That's a good problem to have. I hope I always do that.
Right. Gaps are good when they're in your favor. Yeah. And then what I've discovered, if I do have opening gaps, I know how to mitigate. I just do a 3-minute turbo, do off of OR 30 and use that hybrid frog a little tighter, and then same exits, no big deal. But what I find is that you can make up quite a bit of ground on a 3-minute chart during the day if you have that morning surprise before you've had your second cup of coffee. Money management, no more than 6 open, 1% allocated equity, which we talked about last week.
Is that per trade or is that 6
per trade?
1%? Okay.
No, that's per trade.
Yeah, and so that's maximum heat of 6% ish.
Yes, right. And then review it weekly, right? We talked about that last week, and that's how you can scale the system and then just let it run, right? Mental readiness, you got to be disciplined. No other persona in the trading room, sniper and coach. You don't want to get creative when things are going. And really, this is just executing the standard patterns. Doing the kata long and shorts and the collapsing dragons and the SSCs. And then I think the tricky part here is the exit management.
Yeah,
You
what
know,
I want to
skin
say on that is the rule of 4 and that little template shows you the safe space in which you can play around with craft knowledge. But it's sort of like
Okay.
there's a line that there's my 75% keep line. So if I'm trying to monkey around in here, okay, don't let it go past that line. Because then
Yeah.
then my supervisor comes in and chews me out.
Right.
So I'm allowed to work on my craft knowledge. That's the case where, let's suppose you were on a 30-minute bar, right? 30-minute bars. And based on that, you had drawn your must exit at 75% keep, and it's 50 cents away on your 30-minute bar. You say, okay, now let me go down and play with the 10-minute or the 3-minute. I'm gonna skin of the dragon and PSAR flip it and all that other jazz. You'll see that big red bar or the big red line, which transposed or was brought in from the 30, and that'll really show you how much discretion you have. And that's the point of no return. How close to the edge you can go. And then you can tweak around inside that, but you have a very clear red line. Do not let it cross it. And that's where I think dialing down on the 3-minute and the 10 sometimes has let us forget what the absolute professional standard exit must be. And I'm in there trying to monkey around with it, and I get committed to my idea. That one just says, hey, use that 30-minute bar, put that hard red line in there that says that is my professional must exit at line, or my accountability partner is going to chew me out, or is going to just look at me and say nothing, and then I'm going to feel terrible because they're trying to spare my feelings. That makes it hurt even worse. Yeah. Right. So that's how I would like you to think about that, the rule of 4s, and especially if you put those little dash lines in there, the halves.
Oh yeah.
Those little half steps, that'll end up giving you a pretty clear, hey, we're going to try this experiment for a couple, 3 or 5 minutes using the skin of the dragon and whatever the heck it might be. But it always has that reminder of it's like putting protection in when you're mountain climbing. You just tap that in and says, that's going to save me no matter what. I'm going to try my moves, but that thing is locking me in so that I don't fail. Right.
Yeah. Yeah. And I will say once I put that on a chart, it really is very comforting, because then I know, right? I know where the line is, I can, jump around here and there, but I kind of know where I'm going, but I also know, okay, here's the line in the sand, get out.
Yeah. I make sure that when I put that red line in and trade or in TC 2000, it's the thickest red, just dude, can't miss.
Yeah. And then, performance expectation per trade, it's better than a coin flip 3-to-1 payout. And on a daily basis, 90% win, 5 hour a day. And that's kind of what I've seen over the last couple of months. So we'll see. I mean, we'll see over the next 6 months, does that really hold up in the various market conditions? And then, continue to document,
start plotting that. Use the Luke Crockford method there of, sort of documenting the 30, 60, 90-day trades and the rolling expectancy of 30, 60, 90 trades. And then the daily and the weekly stats will give you plenty, but that'll give you some early alerts on turning points and trends. It'll let you know when this thing is really well tuned with a tailwind going downhill. It's like, dude, enjoy it, but don't get used to it.
Yeah, exactly. And then I think I put in additional considerations. I mean, you don't need to make this complicated. Just follow the rules. And when I get into trouble, it's usually when I try to anticipate, or I just read the latest news feed, the news feed, and say, "Oh my God, this is going to happen," and then I get ahead of the game, and then I get into trouble.
Yeah, here's how I figured out how to do that. I just make sure that when I react, that I'm certain that every other trader in the world read exactly the same thing and is coming to the same conclusion. And then,
Right.
so
Yeah.
now I'm going to be the first guy that moves out. So I comfort
Right.
myself.
Okay. So that's the flashcard. I mean, that's really kind of all I've been doing.
When it comes to news, here's how I know what's happening on that. There's some little AI that's studying monkeys and says, how can I write this headline and put it in a place where the maximum number of monkeys will, and am I going to be the monkey, or is that who? Don't be that monkey.
Okay. So and then this next thing on beliefs, this is something that it's hard to talk about, and I think it's one of those things that intellectually I think maybe you can understand it, but when it happens to you, it's really like, oh, this is real stuff, right? So for me, aha moment is I can change a belief, and when I change a belief, I should get different results. And what one of the beliefs I had, this probably goes back, a year and a half, 2 years ago. I thought investing was complicated. Only the smartest can do it. And you have to have the Wall Street Rolodex, because everybody I knew who was very successful, this is who they were, right? And what happened to me with this belief, I was that frustrated investor. I was chasing Holy Grail, and I had terrible market results. I mean, just, very, very, very tough, tough situation. So it's like, learn how to do it or move on, right? So I chose, let's learn how to do it. So when I was developing this new belief, which I didn't know I was even doing, right? So I took Kata Challenge with Griff and Phil, right? And so one symbol, one pattern at a time. And what that really did for me, it slowed everything down. I wasn't getting confused with all the noise, jumping around. It wasn't complicated, right? I mean, it's pretty straightforward stuff. And I had consistent R returns. I was making money. Yeah. So I totally flipped everything I thought you had to do to, oh, it's very simple. There's a process, there's rules, and this is what you can expect to do.
100% of the people, 100% of the people that have followed through doing daily Kata Challenge for 100 days in a row are successful traders.
Yeah.
There's 7 of them. 7 out of 7. Not saying that's the only way to do it. Not saying it works for everybody, but 7 out of 7.
Yeah. Yeah. So I just really, as I now reflect back on it, I didn't know this was happening, but when I reflect back on it, it's like, oh my gosh, I really changed the belief, and it totally changed how I approached, and it totally changed my result. And I'm happy with what's happening. So new belief, investing's easy. You get a strategy, you get a process. You just can't think about it. You got to follow it. But it has to be you. It can't be something you've read or someone.
And the other thing I'd say is don't tell anybody, and don't talk about it. Just
right.
What the graduation ceremony from the Kata 2 Challenge in that line of reasoning should be a pair of mechanics coveralls and your little name plate on Velcro to just slap on there. You put that thing on and just go to work.
Yeah, right.
Do your job. Belichick, do your job.
Yeah.
Make the block. Change the oil.
Yeah. So I think now with this the system I'm on now, it's I feel very comfortable with it. It's really kind of based on simplicity, and I've had great results with it. So that I've come full circle.
I insist that by 1 September we better have this in a course that is meeting your standards and our standards for just teaching it. By the freaking number, call it the Kata 3 Challenge for your particular rule set. So the Kata 2 is the rule set hammered out with Luke and Griff. Kata 3 is your particular rule set, and train one person to do it, and we'll film that thing and just lock it in, and no extra material, just exactly what it is. So that's the goal, is 1 September teachable course.
Okay. Yeah, that sounds good.
Yeah.
And anyway, I mean, beliefs are hard. I think they're hard to think about, or it's hard to reflect on what you're doing. But I just was really amazed when I thought
Yeah.
back and went through this exercise that, oh my gosh, it's
It
really
makes
out
you
there.
look it makes you look in the mirror that you constructed and just
Right.
keep looking at it, warts
Yeah.
and all.
Yeah, super. Okay. That's all I got.
Okay, Mark Holland.
No real trading updates. Been working with Sundeep on Lifelong Edge. We're getting we should have a website version for you to review, I think Sunday
Yeah.
or Monday.
Figure out how to make a blog section of that for these hundreds of articles that I'm going to send you. That so it doesn't divert from your concept for that, but I need a place where we can be populating a legacy set of instructional articles and content.
Okay. Yeah, we have a section for the TC2000 screens.
Yeah.
So we can probably duplicate that or make something similar.
Yep.
And have that be part of the tree.
Yeah, I just need it to be a reading room. Think of it as a special section, a reading room for the OWL collection.
Okay. So yeah, so moving through on that. So that's been the main focus. Started going through the foundations course again. That was going to be something we're going to add to that as well. So
one September deadline for having that updated in Rizuku. I want to retire the other one or have that as the legacy. I want Foundations 2 or something like that, where we have a more concise and focused set. Because the Foundations has accrued a lot of parallel ideas that are not necessarily reinforced. I mean, it's a fountain of good ideas, but I at least need that. It's either a roadmap to 4 or 5 different pastures, or it's a boot camp for a structured approach for more than one system or something like that. So we got to think about what we want that to be.
Yep,
So,
I am starting to think about that. I have a few ideas, but I want to move through the whole course.
I'm actually, if it were cleaned up foundations, and it was the foundation of a multifamily dwelling, where each of these guys have other things that it can, and that's the common cellar and study area that has clearly demarked areas. That's fine too, but I just felt like I had the way I left that for you guys was in heaps.
Yep.
And
I think there's plenty of
you know what I mean?
opportunity to, like you said, make it a bit more concise, targeted, I think.
Yeah.
And also to sort of, my thought was to align it thematically with some of the, some of the focus areas that you have.
Day swing long,
Yeah.
supplement for core and high, or core and turbo, that kind of,
Yeah.
like the RLFF is really its own system for longer term looks, and it hasn't been satisfactorily addressed in its own course, but it's a collection of things that matter. And the visual box trading is a collection of things too. So anyway, more to follow.
But yeah, in the context of your frameworks. So the systems in the context of your framework. So
yeah,
give me a little bit
may
longer.
be the thing there is here are frameworks and then here are systems.
That's exactly what I was thinking about this.
Yeah. Like the scaffolding and then the activity, the specific rule set for
Right. Here's your guidance and then here's your specifics. Yeah.
Okay, good for now. Tim, bring us out.
All right. Like I said, actually really good progress. So did a bunch of programming and deep diving. Let me get this shared here real quick. Got through a couple of bugs in TradeStation, got a hold of Jeff and did some email communication with him. I'm going to set up some time with him, some consulting time with him. I don't know if it'll be next week or the following week to go through a couple things to get some fine tuning done. But I've got it set up in TradeStation. I've been going through some symbols, doing some back testing. What I don't like about TradeStation is it's hard to calculate an R off the results.
What you may have to do is simply implement the rules for the system, find all the results, then do a second pass and take the average loss and establish that as 1R, and then reconvert everything into factors of R based on that after the fact. And then you'll be able to get a normalized profile of the collection, all the collection of trades.
So Tim, I've done that. So if you go to the strategy report and then you export it to Excel and then you sort on the first column, you'll get a number and then a blank. Then you can go and find then you can run a little Excel formula to find the negative ones and then average that. I can show it to you if you want.
I got slim some of that out, but so these are all the results on that. So yeah, I'll pull those negatives and I'll just average them.
Yeah.
These are the accumulated, or these are, right. It puts it out as a net profit plus the accumulated. So I got the net profit for the trade. So okay, I'll just average out those negatives.
After when you do that, also run the standard deviation on the averages or on that stack, and then you'll find you'll find the average R plus or minus for a normal, and then that'll also then you do it. Then look at the shape of that histogram, and that'll tell you how consistently clustered the average loss is, or do you really have a really wild looking set of numbers? Because you probably also want to look at the median as well as the average. The median will give you the 50th percentile loss. So you want to get a view of the shape of the histogram of losses as well. That's important.
Yeah, this report didn't pull out the graph, but yeah, the graphs are pretty. Some of them are pretty scary.
Yeah.
Some have got thinned out. So okay, it's got the data in here. So all right, I will. I was going to do something extremely complicated, so I'll take the simplification of that to 4. Okay. Then the next thing I did.
That's still looking okay. 2 to 3 point flip, 2.5 to 1 payoff. We can work with that.
So what I did here was I went and I pulled the risk Z for this date range, and I classified them out as how I do them 1, 2, 3, 4, 5, and 6, and I tried to pull it out, and it's actually kind of interesting. It doesn't really make a difference if I pull out 4s or I pull out 5s or pull out 6s, which are when it's typically going down. But anyway, long story short, so this is it's a kind of a modification of your WMB3.
Yeah.
When the market has pulled back, it's actually kind of good to see here, right? So this is Jim Carroll's. I don't have the risk Z on here yet, but anyway, when the market basically pulls back into a -1, a less than -1, and it's getting ready to roll up, that's what the WMB3. So basically the Williams percent R, less than -80, picks up basically better than 95 to 96% of almost every one of those things, and it's killer. But what's killing me is not killing me
is after it rolls over.
Yeah, and it's kind of in the chop zone. So
that's where you got that peak performance, and it's the slope of the RL30 gives you a directional bias now. And
so that's
what you're going to see is that all of the cotta 2s on the downside pay off once the RL30. Remember, the slope of the RL30 is the health of the market. So when that thing is decisively up, that's where you got that one nice, really long trade on the left-hand side. Once that RL30 comes into the 12 o'clock position and then starts rolling over, now suddenly all of those cotta 2s start sucking. And it's the cotta 2s and collapsing dragons to the downside. You should be emphasizing collapsing dragons when the slope of the RL30 is negative. Every time frame. Collapsing dragon is the way. You can even do cotta 2 shorts when the slope of the 30 sucks. That's just a fact.
Well, so what my next step is to basically do the inverse of this on the SQQs, right?
Yeah.
So that'll be the inverse.
Oh, okay. Yeah, that will also work.
And
the one thing to be careful. Let me caution you. The one thing to be careful on that is that those are not symmetrical. All right. So
they aren't.
The WMB3 when you have a on a bull market and the thing is kind of going up like this, you get waves of a certain length and it's all like that. When that whole thing rolls over, you get sharper and sharper and sharper, right? Oops, I didn't mean to hit the eraser on that one. Sorry. You get this and sharp, sharp, sharp. So I get used to a COTA 2 trade that takes this long. Maybe that's 5 time period, whatever that means. 5 length of trade is 5 and 5 and 5.
5 to 7 days.
On this one, when that breaks, this time frame might only be 2, because the collapsing dragon is fear-based and expresses itself much faster than the greed-based, which is more cautious and grinding. So if instead, what you just said was, if I take the inverse of this looks like, and now when I want to take the long one, he's only lasting a couple bars or a couple days. So you might have, when it's in your favor, you might be saying, hey, I'm willing to give it 5 days and let it grind because I'm used to it takes 5 days to unfold. But on the inverse, his trades are only going to last 1 or 2 bars. So you got to be looking at the profit target you want to preserve. So these might only last 1 to 2 bars or 1 to 2 days or whatever, whereas this might last 3 to 5 days. So my point is that the climb up the stairs, jump out the window, even when you trade the inverse, it's slide down the slide and freaking, I don't know what that is. Hit the you stepped on a rocket ship or something. The inverse trades are faster and sharper because the climb up the stairs, jump out the window is not symmetrical. That's what I mean by not symmetrical.
I was looking at the 30 and I said it can't be completely automated.
Well, yeah. Stop right there for a second. Stop right there for a second. See how long this took to unfold?
Yeah. Yep.
Whereas this, fast. 1 day. So this could, when you trade the inverse, you're actually going long on those. They don't last as long. One of them does. Anyway, just be mindful of that. Okay, keep going.
Yeah, no, good point. So that clarifies that up a little bit, but it's so the other thing is, like even on some of my other trades, I'm really starting to come to have a high level of love and appreciation for the Williams percent R being below -80 and not entering above 50. Right, if it's above 50, I'm probably too late. And I got to just be careful with that.
I'm just loving the collapsing dragon here.
Yeah, it happens quite regularly.
Yep. And this is because, and these are all happening when the RL30 has rolled over. When the RL30 is rising, or the slope of the 30 period RL is up, then all of those COTA 2s really work. Once that rolls over, you want to be hitting collapsing dragons because there's a disbelief in the market. So all of those little long shots on this side are failing because the overall mood of the market is depressed. So that's why you want to emphasize collapsing dragons and COTA 2 short sides. When this thing rolls over and the river gets good and the SMA, now COTA 2s are working. Like that's a reasonable effort there. It better prove itself soon. Okay, keep going.
Yeah, so anyway, let's add some very good insights. A lot of back testing, trading, basically looking at TQQ, Soxhole.
Yeah, I think you're going to find this one here, short-term swing trading 2 to 5 days. Sounds an awful like what we just said with Dan. That's why you two guys need to.
Yeah, and it's going to hit. So that'll be the second system, the 401k system. Like when it goes long, like I said, when it resets, when the market resets, it gives risk C gets less than -1 and turns back up. You
Yep.
got about 5 to 7 days on the first leg, and then usually you get about 13 to,
Yeah.
depending on how long you're going to be, right? So, yeah, just something to kind of help pick up those swings. So yeah, that'll be good there, Dan. We'll tie off. So basically, keep doing the process, keep following the rules, discipline following. I said I got a hold of Jeff, so I got to put some details down, get my thoughts kind of put back together, and I'll meet up with him. And I do need to get into the Edge Raider, the L group.
Sounds good. All right. All good.
So,
Last
yep.
chance, last call for alcohol. Going once, twice. I'm going to do a set of notes on this one. I think there was a lot of good summaries. I'll do the notebook LM on this. That'll probably be tomorrow before that all gets done. But because I don't have the workstation set up yet. Yeah, that thing will crank. I hope it uses my machine for the processing and not their. I'm afraid that it's actually using the Google engine to do
Hey,
that. So my workstation
just-
won't approve that. Yeah.
Just word of caution, you're not using like solar or wind to power your house, right? You're actually going to be on coal or gas because you're going to need it, probably even nuclear.
Yeah.
With that thing running.
Yeah. Well, I got I got a geothermal. So yeah.
Good.
And I got a tribe of little hamsters on the wheel that are they're in shape and they're running hard. All right, fellas. Hey, take good care. Really good work. New year. This is the year of production. So let's get her going and take good care. I'll see you soon.
Good night.
Tom. Quick. Did you some comments or questions? Try your mic. See if. Yeah, I'm not hearing you. You want to just type the question or?
Good night, gents.
All right. Yeah. See you, Mark. See you, Dan. Yeah, it's not. I'm not hearing the sound. Yeah, it looks. You're showing it's not muted. Let's see here. Has to unmute. It may just be a bad mic. Hey, I need to close this session up so that it starts processing in the background. I'm going to open it up in about 15 minutes for the nightly review. But let me check back in about 15 minutes. Hey, Tom, I'll be back in 15 minutes.